Let's go into Gino's gems. We've been doing this each and every Monday, by the way. Coach Gino is a veteran coach at Tackle Trading. He's been around the markets for about 25 years. And I would say one thing about Gino is he's got a lot of tricks. He's got a lot of tools he uses. He highlighted position sizing tool last week on our watch list. Gino, what you got for us today for Gino's gems?
Yes. Last week, real quick recap, and we're going to continue with that. We had a position sizing tool, and we even talked about it on the Cash Flow Club and really detailed it. So anyway, looking at this position sizing here, last week, it was very basic. It's on our website. It's called TradeView. It's impacted inside of our newsletter here and our stock reports, option reports, what have you. But basically, Tim, just a real quick 2-second recap. You throw it on here and it tells you how many shares to buy based on your risk. You come in here and you say, well, I've got a $10,000 account, 2% risk per trade, and it puts the shares. So based on this random one I put here, XLF, here's your trigger in, here's your stop. It tells you 160 shares. If I stretch it out down here, it tells me 81 shares. Great. So it makes math easy. It makes life fast. It makes everything easy. Got a lot of good response from the students saying, oh, I didn't know I could do that. And also it takes away the excuse that, well, position sizing is too hard. I just don't get it. No, it's the most important thing. You can't have any excuses for it. It is your first line of defense. So I'm going to take this a step further because the question was, well, what do I do about options? How many contracts? What if I'm doing a bull call spread? What if I'm doing a butterfly, right? I mean, this doesn't help me. This is stock. So if you go to our site, and I don't know if you guys have seen this or not, this is really awesome, is our trade journals. Under Trade Center here, trade journals, you could come in here and download them. And this is a special membership and premium service here for our trade journals. We talk about these all the time. And once you download it, this is what it looks like. And by the way, guys, this is gold when you look at this. You look at the trade journal, this is what you're actually thinking about, right? I've logged in a whole bunch of trades here from my student trades and stuff that we do. But when a coach, so somebody like Matt and Tim get a hold of a trade journal like this, we can analyze this in about 15 minutes and tell you exactly where your strengths and weaknesses are and really dial in your trading. So they are an investment in yourself, these trade journals. But what I want to talk about is that position sizing question. Down here to the bottom right, see this red button? You left click that. And let me circle so you guys can see it right there, right? You left click that and it brings up the position sizing calculator. Now to make the lesson faster, I already typed in the same thing as the other chart here. Here's the XLF here. You put in long or short, right? And here's my entry. Here's the stop loss. And what it does when you type in just this part right here, your entry and stop loss, it tells you how far away your stop loss is. Which you can do that in your head, but why, right? And then it tells you how many shares. Now, based on that, it's calculating how many shares to do on your risk right here. What I like about this, Tim, is it's real easy to click on here and change your risk amount, and especially when we're doing a class or you're managing multiple accounts, I could change that number real quickly on the fly. Then it tells you the cost and the cost if you have a margin account, because most traders use margin, unless you're on an IRA or something. So this is important too, so you know how much money you're putting in that trade. Here comes the option stuff that we were talking about, where the question came in, is the call or put. What strike you buying? Now, that's not really that critical that you put that in there. The most critical thing is, and it only takes a second, is you put in the delta. So if I buy a call with a delta of 60, this is the Greek that we decide on which, and you don't have to put the price in there, but it'll calculate it if you do. It'll tell me my risk based on this stop loss is $75 a contract. And because of that, I could do 2 contracts. Let me highlight that a little better with a different color. 2 contracts. You see that? So now I know I can do 2 contracts or 160 shares. So this way, I can position size using options correctly and stay under my risk parameter. Now, real quickly, what if your delta is not 60? What if it's, 63, or let's say 55? I put 55 in there and boom, still 2 contracts. So it makes life easy, right? Then the question came in, okay, here's the hack part of it, Tim. I just grabbed all these entry and stop. I just dragged this down, you know what I mean, to make it easy. It's just an Excel spreadsheet. I just went like this and dragged it down because this is all the same. The entry and exit's all the same here. But what if I said, okay, I want to do an out of the money option. So I'm going to put out of the money option. Let's say it's a delta of 30. Here's the hack part of it. Whatever your strategy is, you just put the delta in there. Based on that, I don't need the option price. I just need to know how many contracts. That's 3750 risk, and it's 5 contracts. Okay, well, wait a minute. What if I'm doing a spread? What if I do a vertical? I'm going to put vertical in here. Now, based on our rules, we like a net delta. So I'm going to use net delta of 25. Well, based on net delta 25, I just grab this little tab down and guess how many contracts? That's 3125 risk. I can do 6 contracts. So no matter what strategy it is, all you really need is, in fact, I'll just put a made up strategy here. I'm just going to put question marks. I'm going to say, you know what? It's some kind of weird debit condor, open wing, whatever. And it's got a delta of 15. Based on that delta, my risk per contract is $18 and the contracts are 10. So that didn't take me that long. So there's no excuse not to position size correctly. And then here's the fun part of it, Tim. Let's say you and I are talking about this trade. You might do a certain one of these strategies. I might just buy a long call. But I say, okay, Tim, what's your risk per trade? In fact, give me a risk per trade, Tim. What do you think? Not 200.
Let's say 400.
Okay, so 400. I type in 400 there. And when I click this, boom, automatic, there's your contracts. That's how many contracts you would do. And let's say another person's like, well, I want $125. Now check this out. That's not a lot of risk. 120, 1 contract, 3 contracts, 4. So all the deltas are in here. So final little advanced hack. Really all you have to do is put your deltas in here that you'd possibly use and put different numbers in here, $1, $2, $3, $4. And by the time it fills it up, all you have to do is switch your risk up here, and it doesn't matter the strategy and how far your stop is. Your playbook is done. Your playbook is done because you know exactly right here how many contracts to do on the options. And by the way, I had no math. I did 0 math on that. It's all calculated in there. That right there, Tim, is one of the most valuable things in our journals. But check this out. After you've done, ready for this? If you do it correctly and you're consistent, after you've done about this many trades on your journal, you probably won't be going back to position sizing because you'll remember it. You'll know, hey, with my stop loss $1.25 away on out of money call, I do 3 contracts. You know, on a 55 delta, only 1. You'll start remembering. It becomes a pattern. But this is one of the biggest steps I see students missing in their whole career. That's it, Tim. That's the hack of the week, man.